Well, I got that wrong, didn't I then? So Powell was dovish, market went up. Let's check out the levels because I didn't really account for this type of a scenario, even though it was a 50-50, you could say, but I need to draw in some new resistance lines if the market decides to continue higher. We're looking at the SPY now. It was hanging around here, and before Power spoke, it was kind of low, looking to flush. It was all looking so good. There was even some negative GDP. To me, fundamentally, the problem remains the same, but I still think we're in a bear market. I still think we're going to go down despite this, but you have to respect the tape. You have to respect the chart. So we went up. Now SPY closed at high of day, unbelievably strong, kept on going up. I thought we would actually reverse. And there was a day, when was it? The day after he was dovish. The next day, it just completely crashed on everyone. So let's not discount that possibility. But I mean, to crash, it's going to take a lot to close lower than yesterday's low. So maybe a strong reversal today, all the way back down below 400, like a close below 400 could mean, hey, wait a minute, that was a trap. But to be honest, the way the market was, and it wasn't just the S&P, it was Bitcoin, it was gold, it was everything basically. Everything was up in tandem. So it looks like there'll be some continuation. Now, we did do quite a big move yesterday. Look at these 3% on the S&P, 4.5% on the NASDAQ. So we could go a little sideways down and then keep going up. But yeah, I actually thought we would go down. I didn't really look at the resistance levels above too much. Now, look, we do have this ascending. So obviously we close at the absolute descending, the descending major trend line. So we are at resistance on the S&P. There's a little higher one there, but otherwise I think we're at resistance. So it'll be interesting to see whether there's a continuation or a bit of a pause here, sideways consolidation. That's the S&P, pretty bullish, but again, we're at resistance, major resistance, which the Dow has already taken out, if you remember. The NASDAQ also at resistance, last high right there. That's, again, right on the target. So, and you can see it was also because of this one. So we're at resistance on the NASDAQ, not as strong. It's not the descending resistance, so we could go a little higher. But I don't think today will go much higher. I think yesterday's move was pretty crazy. So maybe it's up and down, but basically sideways action today to then maybe resume a test higher, and that would make the NASDAQ break, the SPY break out of its descending line. The Dow is the most interesting one because it's already taken out its descending line and it was already hovering at its next resistance we identified. Has gone higher, closed the high of day. Next is this massive target I didn't even want to draw because I thought it was ridiculous that we get there. I mean, just zoom out. What the hell are we doing all the way? And we're going to go there. What are we doing all the way up here in a bear market? And I'm sorry, but we're going to pause rate increases. Yeah, you're going to maybe pause after a 50 basis point increase or 25. It doesn't even matter. Even if you to pause today, you're holding the market rate where it is with the debt we have. It's going to break where it is now. So even if we go a little less higher than we thought, just a pause, an immediate pause for me should just make the market go all the way down, because there's a lag, there's a delay in the effect of interest rates going up and quantitative tightening taking place. There's everything works on a delay. So the Dow screaming to test all-time highs, no, not buying it. Even I was thinking there's one scenario that can justify this move up generally, and that's the fact that stocks are a good place to hide in inflation, historically speaking. But that's always been the case. So why the move up now? I think that the market's got it wrong in terms of how healthy the stock market will be in a high interest rate environment for some time, which we're in already, but we haven't had the for some time part. So I think the delay is going to shock everyone, but this has shocked me. So Dow, next point is obviously 35,500-ish. Russell, which was a bit like the NASDAQ. I mean, you can see it was in a tight pennant. Again, the market was weak before, so you can see why it was ready to go down on what I would say is Jay Powell's average hawkish stance. It was ready for the drop, I think, but straight away everyone went all the way up on some of his comments. So That next resistance is up here. I think this is this is probably the weakest of the four. And then obviously up there, we'll see. But I think instead of following the Russell, it's really the Dow. See how high that can get, where it sort of hovers and finds resistance. And then obviously these two, the SPY and the NASDAQ. But for me, very, very surprised. Didn't really count for it. Obviously, I'm long, so it was good money yesterday, but pretty disappointed that I lightened my bags because I could have made more. And I think sometimes people get more annoyed with moves that they missed or moves where they could have made more money than moves that lost the money. I think there was some sort of psychological behavioral study that indicated that to be true, which is pretty strange if you think about it. But sometimes I can feel that pain when I miss out on heavy gains. So that's the markets, the VIX. I mean, for me, any move higher in the markets, VIX goes straight back down to here, under 20, let's call it 19, low 19s for sure. How can you sell volatility under 19? You know, I mean, what are you thinking all-time highs? Then again, I guess I'm wrong so far because I didn't expect this move up here, but the day is young, you know, I don't think it's over yet because there could be more news today. I got to check the calendar, or there could be a Fed speaker that comes out and just completely reverses because they play games. They jawbone the market. It's all psychological at the end of the day. I mean, how can the market move this much on someone's words? Let's just see how the market is in 6 months after continued high interest rates, the war. I mean, let's see where are we really going to be all the way up here? Is the Dow really going to be testing all-time highs with total recession already in play and everyone else stating, those who don't think the recession's here say that it's going to be here soon. So I'm sorry, I don't see how you can buy. I mean, yeah, short-term trading, okay, we broke out maybe, but position-wise, long-term swings, even swing trading, it'd be pretty hard to justify a long here. Maybe day trading, but anyway, that's the markets. Went up, VIX down, unbelievable. Interest rates, though, why did they not crash as much, right? I mean, the 1 year was, I'm doing this the next day, by the way, but the 1 year was basically testing all-time highs. So, and now here we are, we're still at all-time highs basically on the 1 year. The 2 year, yeah, you see, that's what I thought was going to happen. Go back and test. So we're now basically hovering. It's not even, it is a right shoulder. It is a right shoulder here. So you could say, right, neckline is imminent to break. And then we've got these downside targets. I don't think I need to move these downside targets. I think they're completely correct. We lose this, we basically go down here, we hover, then we probably go down there. But it depends, right? If what happens if the market starts collapsing and then we reverse. So these are the targets on the way down. Nothing to change here. The 5 year, I need to draw some more targets, but yeah, these are the correct ones for now. So we're still just holding support. Here, there's no right shoulder. It's just some, I don't know, some sideways, choppy, dismembered shoulder. So I think it wouldn't take much to go down here. Obviously, as we go down the yield curve, you can see it gets weaker and weaker. Here, we would flush all the way down here, I reckon, if there is a drop in general rates, the 10 year being the most important. So it's got to hold this. But again, I mean, I don't want to call this a double head, but there's no right shoulder. It's a very weak head and shoulder pattern, if you want to call it that. I guess you could. 30 year, about the same thing. And it wouldn't take long, it wouldn't take much of a drop down to get to its ascending support, very significant one. You know, it's credible. It's hit many times over a long period. So you don't want to lose this either, because then we're talking all the way down here. And that's a massive retracement. But, you know, the market will adjust. I mean, once rates go up, they go up pretty hard, pretty fast over several days. So even if you went all the way down here, if rates resume a move back up, it doesn't take much to go all the way back up. Anyway, rates looking weak, but still holding their current support, I think you can say, but looking weak. But the 1 year, look at that divergence, just it's ready to go up. Everything after that is just ready to go down. So immediate interest rates looking to go up. Let's check out the dollar. Now the dollar basically looks like the interest rates, right? The 2, the 5, the 10 year. Wouldn't really call this head and shoulders anymore. There's too much chop in there, but the ascending line was lost. We came down here. We're still hovering. This is still support. To be honest, I would have expected a heavier move down in the dollar, given Powell's comments and given the market's moves and gold's move, but who knows? That'll probably come today. I think it'll take a lot for the dollar to hold now 105, and it's gone up quite a lot for quite some time. So I do kind of think that this will have to flush just to look healthier. How are you going to reverse here? You need to have a massive you need to have a flush and then a move back up on the same day and a close above sort of 105.5. Have a nice hammer, and then you can start curling and breaking out the sort of, let's call it, zoomed in ascending line. I think that one's going to become important. So flush, chop sideways, and then break out of that if you want it to move up. Otherwise, looks weak. Looks weak. I haven't actually looked at the other currencies. Yeah, it looks strong. Obviously, break out of 105 would do it. And look at that. It's already started its drop today. 1.24% down. This, yeah, dollar Japanese yen going down to 132. And everything will feed off each other, So I reckon that'll probably move the DXY down, to be honest. The pound might move up a little more too. Yeah, so maybe the dollar will come down. I'd say 103, 104 at least. Maybe starting that today. And then I don't know, maybe that gives more fuel to the market to go a little higher still. But I don't know. If anyone's long out there, please tell me why. Let's look at gold and silver that had crazy moves. Bit of continuation today. Now, yeah, we're testing highs now. Yeah, so yesterday was a good move. It was actually quite strong yesterday, especially silver. I'll get to that in a second. But gold basically testing its old highs. The target's right in the right place. So next move up, 1800. That'll come today, tomorrow, if there's any continuation, which looks to be the case. And then really the question is, after that, what comes after 1800? I'm not even going to bother with this target. This is too obvious. I would say around here, 1860, but that's a hell of a move. Once you're 1800, you get to 1840 quite quickly. Yeah, well, let's say 1850 just in general, let's say. But big move. And then we're really talking about having made back quite a bit of this drop. Still far from all-time highs. GDX and GDXJ especially. But if you think the market's actually quite close to its all-time highs, especially the Dow. So yeah, that would justify a move there if the markets keep going up. But that's going to be quite a hard one to do, I reckon. Unless they really capitulate, the Fed really capitulates early, then we go all the way up. So yeah, gold looks strong, back at its old target, looking for 1800. Silver starting to resume its relative strength. So you can see yesterday it already achieved that. I mean, it basically closed pretty much at the all-time high, the recent high. And today we're already breaking out, testing what is the equivalent of 1800 on gold, which is 22.5 on silver. So I reckon looks like we're on our way already. Close above it today, and then a move higher. Let's look at the miners, which I was hoping to come down because I sold this twice. I sold this move up here. And then when we had this move, I really thought the market would come down. I thought the miners would come down with the market, so I sold again. And then yesterday I didn't touch it. I mean, I just watched the gains, didn't sell anything because I have the minimum amount I think I should have in my portfolio of miners. In case, basically, I keep a minimum amount in case I'm wrong, because long term I believe in them. So I did make decent money yesterday, but I could have made a lot more, which again is probably more infuriating. I think I would have preferred to lose money yesterday. So next move, I don't think I need to move the targets. They're right where they should be. Next line, very detailed and zoomed in. This probably equates to 1800 on gold. This would probably be a break above 1820, 1830, and then this would be the 1860 zone, I reckon. But they will also move with silver, so you've got to watch silver here, the same sort of thing. And you can see if you zoom out, you're far from breakout. I mean, all-time highs. In fact, you're far from even taking out this descending line. So we've got a long way up to go with several layers of resistance. Going to be interesting to watch how high we get before what I think is going to be a market surprise drop. And remember, it takes 1 or 2 days of heavy market selling for everyone to just wake out of their trance. and go, wait a minute, why are we buying all the way up here? Isn't this a total bear market? And then reality kicks in. So I thought that would have happened yesterday. It would have been the perfect chart timing, catalyst, everything coincided perfectly, but it was a surprise move up. But let's see, because we also had a massive move down. I forgot when it was following a Fed day. So anyway, let's see. Exciting nonetheless. And let's plan accordingly for this type of scenario where the market moves up instead of down. So good luck. I'll do another video later.